I'm Deborah Owens, America's Wealth Coach, and it's time to get wealthy. You're going to learn exactly what you need to know to finally achieve the level of financial success you desire and you deserve. Today, it's all things crypto. So let me ask you, is cryptocurrency a fad that's high risk, or is it a burgeoning new asset class? Well, here's what's really interesting. According to a new study by Schwab and Ariel Funds, Black Americans are taking on crypto with open arms. 25% of African American households now own some form of cryptocurrency, compared to only 15% of white US households. And today I'm really excited because we've got someone here who's going to explain it to us plainly. She's Tanya Evans, an attorney and cryptocurrency expert, and she's going to help us know what we need to do to navigate the digital asset landscape. So here's what you need to know and understand about crypto. The first thing is that crypto is any form of currency that uses blockchain or a form of code. And you also need to know that there are different types of crypto coins that we hear about. And then finally, we hear a lot about Bitcoin because that was the first coin that was invented and it has the largest market share. So on Wealthy you know we've got a framework for financial success. And it's mindset, strategy, and execution. And that's exactly where we're going to start with our guest, Tanya Evans, a published author, investor, entrepreneur, and tenured professor of law at Dickinson Law School at Penn State. Tanya, I want to welcome you to Get Wealthy.
Thank you so much. I'm really excited to be here, and I'm so grateful to you for using your valuable platform to really make this all make sense. And I'm excited to support you in that.
Well, that's exactly why you're here, because we want to make crypto make sense. And so I really want to help our audience understand what kind of mindset they need to have when it comes to investing in this new asset class. We hear, crypto, we hear fraud, we hear, that it's high risk. And yet what I find really interesting is the finding in this study that so many Black Americans are embracing crypto. So before we get into the why of that, explain to us, what is cryptocurrency?
Cryptocurrency, and you did a great job of teeing up the fundamentals. Think about it in a way of a purely digital asset. We think that we live in a very digital financial system, but it's really a digital veneer over this age-old system of what we call double entry ledger system. And what that essentially means is if I send you $100, Deborah, my bank has to reconcile it at the end of the day. Your bank has to reconcile it as well. And a concept of what we call time to finality, when it's a final settlement of that transaction, doesn't take minutes or hours. It often takes days. Even though I see my money leave my account, you may not see it in your account for days. The time to finality with a purely digital asset like Bitcoin, or one of over thousands, actually, over 18,000 different coins and tokens, and that's just today, is the ability to move value quickly in a transparent way, globally, without the need for a bank or some other intermediary to facilitate the transaction from my wallet to yours.
So it's almost like this is instantaneous. I can remember you one time explaining it to me like it's an Excel spreadsheet and people are and it's kind of like open. And so people are able to enter it instantaneously. But you said something really interesting that I think it's important for our viewers to understand. You mentioned coins and you mentioned tokens.
Yes.
So what are the difference between the two?
Let me say two things. One, when we were talking about the ledger system, we have the cryptocurrency, but we also have the means of managing transactions and balances. That essentially is what a blockchain does, but it does it in what we call a decentralized or a distributed way. Ordinarily, one entity, one person is maintaining the ledger of transactions and balances, also known as the record of transactions and balances. With a blockchain, we have a record, but it actually is not stored in one place, but shared. The responsibility of maintaining it is shared by a network of computers around the world. So if 1,000 computers go down that are maintaining those records, but at least one still remains, there's a redundancy and a permanence of that information. And so I often use the example of an Excel spreadsheet, or a group text is an even better way to explain it. If you have 10 people on a chat or a text, and one person deletes it from their phone, as long as the 9 others, or at least one other person, still has the record of that communication persists. The same can be said by analogy to a blockchain that maintains the records of transactions and balances. To your point about coins versus tokens, I want us to get really clear about the terminology, because that's a part of our financial and fiscal education. A coin is a native asset of a particular blockchain. For example, Bitcoin records the transactions and balances of Bitcoin. It resides on the Bitcoin blockchain. But again, I said there are over 18,000 different types of coins and tokens. There are things called tokens that don't have their own specific blockchain record. And so those transactions and balances are actually recorded to another blockchain. A great example of that is the Ethereum ecosystem, the Ethereum network, also known as the Ethereum virtual machine. There are lots of different crypto projects that build within that ecosystem. They don't have their own blockchain, so they record their transactions and balances to the Ethereum virtual machine. And so that's a way to compare and contrast between a native asset of a blockchain or a token that is probably a relevant project, a tokenized representation of value, but doesn't have its own blockchain for its own specific transactions and balances.
That's good. That's good. I mean, a lot of this, when I think of the whole cryptocurrency landscape, it's kind of like the wild, wild west. And so to that, just understanding it and all these new coins and tokens that are becoming, like, I hear things like Doji coins would have this little dog kind of wolf head on it, and all these it's almost like people are being marketed to, like you think of memes and that sort of thing. And you also hear of, people really driving up, buying and driving up demand. And so to that end, there's a lot of volatility in this world. And so I really would love for you to what kind of mindset do I have to have if I am going to begin to look at cryptocurrency, not as a fad or some way to make quick money, but really is a part of my overall investment strategy, if you will?
The mindset has to be one where you are responsible for your own finances and the outcome of everything that happens with that transaction. Not only as Black people, but people generally speaking have been, I'm going to use the word indoctrinated for lack of a better word. I don't mean to use such a charged word, but in some sense, there is a lot of education from the beginning about not trusting yourself with your money, not trusting yourself with your assets, not trusting yourself with your value. So very early on, it's about making sure that you may have a high income, but you're always going to rely on others in order to tell you what to do and when to do it. I'm a lawyer. I have financial advisors. This is not an either or proposition, but in order to succeed with any type of investment, you have to take it very seriously and understand the aspect of Kwanzaa, of self-determination, and also of this idea of cooperative economics in this space, because community is very important too. You said something a bit earlier that's really important about the pump and dump schemes. You're concerned that with thousands of different coins and tokens in the marketplace, you're concerned about the apparent marketing that leads to the dramatic rise and fall, also known as the pump and the dump of an asset, which can be very, very dangerous if you get caught holding the crypto bag, right? So that's a grave concern. But if you're chasing something speculative without a fundamental appreciation for what it is, the difference between the different types of cryptocurrencies, the mindset has to be in a sense of education. But I don't want to focus solely on education without also participation, because much of what I learned in the space was having enough skin in the game that it mattered so that I could see what is the movement, what is the life energy of a particular type of crypto. I focused at first on Bitcoin and then found my way to others. I'm not a heavy investor, but I absolutely have purchased crypto and I've earned it, and start to compare and contrast the differences. So fundamentally, education and the idea of autonomy and self-determination in the space is a critical component of success in the crypto space.
Well, it's interesting you say that, because when I'm sure, I became aware of the aerial study based on one of your Twitter posts. I was not aware that that Black Americans, particularly young Black Americans, have really gravitated towards this investment. And many say that crypto was their first investment as opposed to the traditional asset classes like stocks, mutual funds, bonds. And so I'm really intrigued by that finding from the standpoint of, because the work that I've done most of my career has been to bridge that gap, to give access to those traditional investment vehicles. Do you think that the reason that African Americans are embracing this asset class is because of the decentralized nature of it and the easy access to it?
Accessibility and transparency in the space is critically important. And I talk about this a lot because why would a very, very cautious and traditionally conservative as it relates to finances, why would a group of people, quote unquote, flock to this nascent and highly volatile asset? Why? And we will get to the why based upon some of the data points in the survey. But the short answer of it is there is a huge vacuum in the space due to a lack of trust, a lack of transparency, and a lack of accessibility in the existing traditional finance space. It's left us with a customer service issue and the inability to make even a dent in generational wealth when you're not focused on and holding capital assets or other assets that are working harder than you. I don't want to work hard for my money. I want my money and my value to work harder for me. And traditionally, having a high income is never going to move the needle on generational wealth for a number of reasons, not the least of which is being taxed at a higher rate than capital assets. Crypto is taxed as a capital asset. So it presents a really interesting opportunity for direct peer-to-peer access to the potential for extraordinary wealth. There's a potential downside as well. Bitcoin has only been around since 2009. Some of the traditional metrics that we use in order to assess and analyze other capital assets aren't a neat fit in this space. But the lowest lows and the highest highs in Bitcoin, for example, it does have a life cycle. We do have enough data at this point to begin to see the ebb and the flow, even though it doesn't move in the traditional ways that other traditional asset classes do. That presents a problem for traditional finance. And so traditional finance from the beginning has pushed back on this idea of this highly speculative thing that'll be here today, gone tomorrow. Guess what? It's not. It's here to stay. And quietly, major traditional financial institutions are giving access to this asset class. They're de-risking it a bit, but giving access to this asset class to their high net worth individuals. Why is that? Perhaps it's capturing the same systemic ills that exist in traditional finance today that presents this interesting opportunity, albeit certain risks, for Black people in particular who have been systemically marginalized in the traditional ecosystem for having a second bite, a second chance, and a new opportunity to actually amass wealth in this generation and pass it on to the next. That's why I'm excited about the power and the promise. I also talk about the risks as well, and we can get into that. But I find more upside now, and I think the biggest risk for our community is not learning more and participating, particularly with Bitcoin, but other assets as well. This is not legal or financial advice. We're just talking, but to begin to lean in and get intellectually curious about what it means to own a capital asset on our own terms.
Well, yeah, and you know, I certainly concur, right? Because when you look at, if you were to compare this to traditional asset classes, or let's just look at stock as an example, stock being a direct reflection of value of certain companies at certain stages. And so in this case, if we were to look at life cycle, or I were to compare it to something that's, you know, we can all relate to a baseball game, right? There are 9 innings. And, you know, when I talk about stock and small caps in particular, you know, very early stage companies, let's just say, you know, we're looking at first and second inning. And so my question to you, would you look at this new digital asset landscape as being in the first and second inning when you're going to get all that volatility? And yet, if you have this opportunity now, and to your point, if you wait, you could be left off knowing that there is going to be this volatility. Would that be a good way of looking at it from a mindset perspective?
I think that's a really great way to consider it as part of a portfolio. Certainly not the entire portfolio, not even a large percentage of a portfolio, but some, as a hedge against other things. For example, many people hold Bitcoin long as a hedge against inflation. For example, to receive a capital asset, we see a lot of activity in the non-fungible token space for creatives and collectors and the like. I know a lot of people who collect more rare and interesting art that they tend to hold over time. Time is relative in the crypto space and certainly in the NFT space. Although NFTs have been around technically since 2014, only in the last couple of years, in the last year in particular, have we really seen that dramatic uptick in value. And we can talk about that if you want to as well. But even just the laundry list of what I just gave now shows that we should actually be talking about this asset class as crypto assets rather than cryptocurrencies. Is a bit of a misnomer because there are many crypto assets that don't function well as a currency, a medium of exchange, a unit of account, but maybe a store of value like Bitcoin because of the hard cap of 21 million Bitcoin. We actually circulating in the market currently, we already are at 19 million Bitcoin already in circulation. And so we've seen the value tick upwards when there is less of a supply and more of a demand. That's just market 101, right? But
yeah, it is market 101. And I before we go to strategy, I think we need to really define that. And so I basically conveyed at the start that Bitcoin was the first coin and has the largest market share. But let's just really define the origin of that coin so that people understand we're talking about supply and demand, that there was a limited supply of this issued. And as a result, as it trades, that's where the value, if you will, is derived from.
Absolutely. And that is one of the important metrics as people are comparing and contrasting the different types of coins and tokens. So this is an important part of the conversation. Before Bitcoin was lovingly released into the world, and the first Bitcoin was mined in January of 2009 by a pseudonymous character, Satoshi, whoever he, she, or they are. We don't know. It's one of the great mysteries and myths in the crypto space and Bitcoin in particular. What was going on at that time in the world? We had a lot of uncertainty. We had traditional finance. Actually, we're pushing the veil aside to see the major systemic issues in the real estate market. Some of the trusted intermediaries proved themselves not to be very trustworthy. And so the idea that value could be exchanged without centralized money, we call it fiat or government issued currency, a different or alternative means, not necessarily to replace, although I imagine Bitcoin maximalists would want nothing in the world but Bitcoin. I'm a realist. But to have an alternative means to exchange value in the same way that if I had $10 and we were in person, I could hand you that $10 bill and that would be between me and you. The idea from Satoshi's perspective is, could a peer-to-peer form of digital money exist in the same way? Remember also in the late part of the 20th century when peer-to-peer technology was really making a splash, is not the way that the music industry would describe it, but remember all of the pirating of
Yeah,
MP3s,
Napster.
right? Napster,
Yeah.
Grokster, and the like. And that was extremely problematic because you couldn't protect the integrity of one particular digital asset. We'll talk about MP3s now, because I could send it to 1,000 of my not so closest friends from the comfort of my home, but still have the original. That's not going to work for value. And so Satoshi came up with a way to have, to avoid what we call the double spend problem. If I had a check, whatever that happens to be back in the day, dating myself now, but if I wrote a check and I only had $100 and I sent two $100 checks out, first one to the bank wins, right? You can't do that in the crypto space. And it was this novel combination of peer-to-peer technology, what we call consensus protocols, and cryptography, which basically just means the encryption of messaging. Here, the message is about value, about money, but it could be any type of message. So cryptography occurs in a lot of different places, but that's where the crypto and cryptocurrency or crypto asset comes from. This combination to protect money and to be able to transmit it on a peer-to-peer basis, that is what Satoshi was seeking to solve.
And so he issued this limited amount of them. And that is what trading and the value, that's how the value goes up and down depending upon what that demand is. So when we come, this is a great time to segue to, because when we come back, I want to talk about the strategy that someone would take if they are going to do exactly what Professor Evans just conveyed, and that is not be an observer, but also participate as an investor. So when we come back, we're going to talk a bit about now strategy. What kind of strategy should you consider if you're going to learn if you're going to actually invest in crypto? Don't go anywhere, folks. We'll be right back. I'm Deborah Owens, and this is Get Wealthy.
Let's be honest, as successful women, we're crushing it. Maxed out 401k and Roth IRA? Check. Aggressive savings and investments? Check. Yet, the freedom our success was supposed to buy can leave us stuck on the six-figure hamster wheel, watching retirement slip further down the road. There's another way. Get coaching courses and community at wealthyu.com.
Pull up a chair, take your seat. The Black Tape with me, Dr. Greg Carr, here on the Black Star Network. Every week, we'll take a deeper dive into the world we're living in. Join the conversation only on the Black Star Network.
Welcome back, everyone. I'm Deborah Owens, America's Wealth Coach, and we're talking all things crypto today to help you get wealthy. And I'm so excited because with me today is an expert on the whole crypto world. She is Professor Tanya Evans, an author and expert around this asset class, if you will. And I'm excited to be talking to her about it. Tanya, thank you so much for coming on Get Wealthy and having this conversation. I love chopping up, anything that has to do with investing or money. And so I wanted our audience to actually understand, where Bitcoin, that specific Bitcoin or coin came from. And now I want to shift a little bit to investing. Now, actually investing in Bitcoin. So I talked about some of the stats around African Americans embracing this digital asset, if you will. Many saying that it's their first investment, so they've never invested in traditional assets, but yet they're being drawn to this. And I guess my concern, all right, is the volatility of Bitcoin. Right. So we saw Bitcoin go from 65,000 back down to the 30,000s, if you will. With that's huge volatility. And so what word of, I won't say caution, but how should a novice, right, someone who's never invested in this investment, approach it, being that it has shown that kind of volatility in just the near term?
Well, Bitcoin in particular, and it's a good example. When I first opened the proverbial doors and launched the Advantage Evans Academy, the onboarding platform with my courses from cash to crypto, and now decode the future of money and wealth, and some things in the NFT space, there are 2 or 3 consistent metrics as a matter of mindset that we talk about. One of them is time in the market and not timing the market. And it's the type of mindset that one pays perhaps to a retirement account. It's going to depend on your age and your stage. It's going to depend on whether you need access more immediately to liquidity, if you need access to cash, or you're investing for the long term. We call it in the crypto space hodling or hodling. It was an unintentional misspelling of hold that took on a life of its own. And so if you're a real OG in the space, you might say I'm hodling or hodling Bitcoin in particular. But think of this as, what is your long-term gain, particularly for something with a hard cap that functions as at least a store of value and is described as hard money over time, particularly because over the life cycle, supply and demand will ebb and flow in the same way that, not in the same way, but in an analogous way, certainly to the stock market. We'll look and it could be a sea of red on CNBC or some other metric. And it's like, oh my gosh, look what happened to stocks today. But over time, stocks are doing really, really well. The same could be said for Bitcoin. When my students started in 2020, they were buying at under $10,000 per coin. There is no one in my class crying over a pullback or a market correction from 66,000 back into the 40s, which is where we are at the time that we're having this conversation. Right. And particularly for those who are in it for the long haul, knowing that if this is what the value is when there are 19 million in circulation and new entrants into the space and many, many people holding for the long term, the access to Bitcoin is going to continue to reduce over time. People always ask me also, what is it backed by? And I turn the question back to them in terms of what is the dollar, for example, backed by. It's the full faith and credit of the United States. It hasn't been backed by gold for decades. So it requires, obviously, that there's enough in existence that people accept it, that merchants accept it, that it's recognized. And the larger the swath of people and merchants and governments that accept it and recognize it, the more value that will be injected over time. So that's Bitcoin. And those are some of the ways to think about it: time in the market rather than timing the market. Dollar cost averaging, or Satoshi cost averaging, we would say in the Bitcoin space, for example. A little set it and forget it over time is a much better way, so that you resist the urge to look at prices on a daily, hourly, or minute basis and think about what the long-term strategy. A final point there Once you hold a certain type of cryptocurrency, be it Bitcoin or Ethereum or other coins or tokens, you're able to access the value of that without having to sell it. How do you do that? In the decentralized finance space, where you can actually lock up your Bitcoin or your ETH or another coin and extract value. Maybe it is in dollars. Maybe it's in what we call a stable coin that is pegged to the dollar and is always $1, so that you can access capital or cash and liquidity in a way that you might do if you were getting a home equity loan on a home. You can access and leverage your crypto in that way. So that is an additional incentive to at least get very curious and educated about the space, to not only buy and hold long, but then to access the value there for other purposes, more immediate purposes in your life.
Yeah, it's interesting the way you are, equating it to an overall investment strategies, just like you have stocks, bonds, asset, options, or I wouldn't call an option an asset because it is more short term, but
Fair.
Precious metals or whatever, right? So I guess the point that you're making, Tanya, is that we need to look at this like we would any other overall strategy, and yet in reading that survey, it's almost like the traditionalists who are in traditional investment companies, certainly both Schwab and Ariel would fall into that category, were putting up a real word of caution, as if here was another kind of scam that novice or African Americans could find themselves being taken by because of the volatility and risk. What would you say to that?
It's a really important point, and I certainly respect Ariel Investments. Melody Hobson is president and co-CEO. She's been in the space and cares very much about our community and has done so for decades. She's also a Forbes over 50 lister, as I am. I have a great deal of respect for her and the work that she's done. And certainly Charles Schwab, full disclosure, I actually have assets with Schwab. So I'm also a fan of Schwab as well. I'm concerned with how the data has been extrapolated and analyzed to paint a picture or a narrative. And that's the interesting thing about data. The fact of a thing says little, if anything, about it in the abstract. You actually have to start to analyze and crunch the numbers. And there are a number of different analytical metrics and methods in order to do that. They've been doing this survey for over 2 decades now, really focusing on and with an agenda, and I don't mean that in a charged way either, but with a specific agenda to get the Black community more connected to traditional finance and to stocks in particular as a means of amassing generational wealth and sustaining that over the generations. A huge fan of that. I hold a lot of stock. I get all of that. But it's about crunching the numbers. It's about data interpretation, and that gets into correlation, that gets into the causation, like if then, it gets into what might be a mere coincidence. And we also are always, myself included, are viewing data points through a bias. I have a confirmation bias in one way. I believe they have a confirmation bias in another way. Our ultimate goal is actually the same, to empower the Black community. And this type of survey has such power. I want us to be cautious about if this is risky and more Black people are doing it, and we are not as educated about finances writ large and specifically this type, that means this is bad, run the other direction. I think there's a huge risk in actually doing that, casting and categorizing crypto, first of all, lumping it all into one basket and throwing it out with the bathwater. I think that we need to take a pause, get very curious and serious about not missing this opportunity. We've missed so many, sometimes and most often actually by people who don't want us to win, don't want us to participate in this process. But guess what? This process is disintermediated. What does that mean? The intermediaries or the gatekeepers that keep us from participating no longer exist. The biggest gatekeeper might actually be our lack of education in the space and the red flags without a more balanced and fair approach to and discussion of the power and the promise of crypto assets generally, Bitcoin in particular, and certainly decentralized finance for our community.
No, I wanted to, because I read I was reading the kind of executive summary,
Yes.
and that is when the narrative of those numbers really come to bear. And I was seeing this red flag and word of caution. But what we do know, and what I have experienced just being in this whole financial education space for as long as I have, is that when you aren't participating in it, then it's very difficult for there to be, so my point is, the more you pay attention, right? And so I do feel like it is necessary for our community to be participants in this digital asset class. I do think that you're doing a great job yourself in the work that you're doing, not only as being a kind of expert and go-to person as it relates to cryptocurrency and all the other, kind of esoteric things around there, but also that you started an academy to help people, to educate them so that then they can make sound decisions, as opposed to you being this person who's selling these products. And so you have sort of a vested interest in that. And so to that end, when we come back, what I do want to talk about is execution. And so I'm listening to, our audiences, you're listening to us and you're wondering, so yes, I hear that more people are investing in it, but if I wanted to actually get in the game, get into buy cryptocurrency, how do I do that and how to do it responsibly? That is our next, on our next segment, that's what we're going to talk about, how you can actually execute on what we're talking about today. All things crypto. Don't go anywhere, folks. We'll be right back.
We're all impacted by the culture, whether we know it or not. From politics to music and entertainment, it's a huge part of our lives, and we're going to talk about it every day right here on The Culture with me, Faraji Muhammad, only on the Black Star Network.
Welcome back, everyone. I'm Deborah Owens, and we're getting wealthy, and we're learning a lot about cryptocurrency today with our guest, Tanya Evans. She's a tenured professor at Penn State. She also founded Anage Evans Academy, where she's actually teaching folks about how to navigate this asset class, cryptocurrency, and that's what I want to talk about now. So how do you actually execute on everything that we discussed today? How do you actually invest in cryptocurrency? And so Tanya, Professor Tanya Evans, thank you so much for everything that you've been sharing with us today, because that's the point, the next phase that I want to talk about. Okay, mindset. I know I've got to look at this as something that is new, but I can strategy. I can, look at this as a part of my overall investment strategy. And now I'm saying, okay, I want to get involved in this. How do if let's say I've got, a few $1,000s that I just, nothing that is going to, cause any kind of financial jeopardy, but I actually want to invest, and maybe I want to start with a Bitcoin. How do I go to my regular investment company? I know that I've heard that all investment companies don't necessarily allow you to buy Bitcoin.
That's correct. And the blessing and the reality, I was going to say curse, but I don't believe in that. But the blessing, but also the responsibility, let's use that word. The responsibility is that you can directly access with a few important steps. The user experience and the user interface in crypto is early. So it's a little clunky. There are more steps than there should be now. It's better than it was yesterday, and it'll be better tomorrow as people continue to innovate in the access points for crypto. When you go, this is the reason I call my course From Cash to Crypto. Think of it as exchanging one for another. You're going to exchange $1 for $1's worth of Bitcoin, one of the or other cryptocurrency. One of the benefits in the crypto space is you can fractionalize your purchases. It doesn't have to be an all or nothing proposition. So don't wait until you have $44,000 or $66,000 for your first Bitcoin. You literally can open up something like Cash App that's been in the game for a minute and go to like the third or fourth tab and literally buy Bitcoin. Just if you
How do I know if it's
Go ahead.
but you know, okay, so I'm glad you said that. It has gotten a lot less clunkier, and certainly some apps that folks are already familiar with, they can access this Bitcoin or a coin, if you will. However, how do I know if it's safe?
You go, so this is where the issue of trust comes in. And if you know nothing about the space, don't start by using your favorite browser or search engine to find it. There are so many different scams. Scams, actually, even in my own name. I want to use this opportunity to say, I wish you peace and blessings, but I'm not going to slide into your DMs to say that. I promise you I have other things to do with my time than to slide into your DMs to say, hey, how you doing? And do you want me to invest for you? I'm not an investor. I barely invest for myself. I certainly don't invest in others. I am a lawyer. I'm an educator. I'm licensed in 4 states. I'd like to keep it. I've been practicing for over 25 years. I'm an educator in the space. And so there are a lot of scams, but think back to all of the scams. Some of them still exist, unfortunately, today with email. I was getting a lot of emails that said, send $1 million to the king of Zamunda. That wasn't a problem with electronic mail. That was the scam. We didn't throw out dollars because they were asking me to send them dollars. In the same way, it's not necessarily an issue with crypto. It's scammers. Scammers are going to scam. That's a tweetable moment. But what you do is to focus on the legitimate operators in the ecosystem, and that is going to require education. You can certainly tweet me, you can come to Advantage Evans, you can rely on trusted news sources like CoinDesk, for example, CoinDesk.com. That is one of the most trusted news sources in the space. They do top 10 lists of 2 important areas. You want to focus on having your own crypto wallet. It's like having your own bank account, or literally the wallet where you keep your personal balance sheet of transactions and balances. It's the way that you communicate information about I'm sending, I'm buying to the relevant blockchain. And then the other space that you have to get more familiar with are the legitimate exchanges in the space. So not only going from cash to crypto, but crypto to crypto. It's a place where we call onboarding and offboarding. When you're onboarding into the crypto ecosystem, you are going from some government issued currency into crypto. When you are offboarding, you are selling your crypto, quote unquote, cashing out and pulling it back into the relevant fiat, again, government issued currency. So having a wallet and having a relationship with some exchange account are the 2 ways that you get into the space. But first, if you don't know anything about any other space, going to a place like a Cash App, comparing and contrasting your experience with a Cash App where you actually can transfer Bitcoin off of that app into your own personal wallet. This is what I teach all of my students to do. And now I've educated thousands of people at this point, thousands of people in the space. There are other platforms where you can have access to it, but you will have to cash out. You can never pull your crypto off. PayPal is in that space, although I believe they're transitioning their product so that you can actually remove crypto instead of having to cash out. There are other platforms that only allow you to purchase and sell within their ecosystem. I hate to use this example, but I'm going to. It's kind of like going to a casino. You bring in $1,000, you get the casino's chip, you lose all of your chips, but maybe you win some shit. Let's use the other example. You win and their equivalent of chip, but before you leave that casino, you have to cash out. You can't take it with you and have that chip have value elsewhere. That's a centralized system that is antithetical to true autonomy, agency, and self-determination in the space. You need your own self-custodied wallet. With that kit comes a great deal of responsibility. You lose access to that wallet and don't have a way of reinstating it, you are out of luck. So to your original point, Deborah, never invest any more than you have actually to lose in the space, because there can be many pitfalls in ways that even as a matter of managing your own money, you could lose access to your wallet, to what we call the seed words to protect your wallet. You can't call anybody. This is the unregulated space, or the unsupported space now that people are concerned about. What happens if I lose mine? There's no customer service to call and say, I'm going to want my money back. With a few limited examples, this space is not FDIC insured. And so some of the institutional protections people have traditionally relied on don't exist in this space. It's about you trusting yourself and managing your value. And that is a mind shift for sure.
Yeah, it is a mind shift, Tanya. And so I want to go right into how would our viewers analyze, optimize, and maximize getting into, adding this to their overall investment strategy. And so, Tanya, first of all, you talked about resources. One you mentioned was CoinDesk being a repository, if you will, of credible information.
Yes.
Are there any other platforms that you think could be useful to someone just getting their, kind of toe into the water into crypto?
Yes, one other space that is an aggregator of information that is free. They don't have a dog in the fight. They are literally a gigantic aggregator of every data point in crypto, and that's coinmarketcap.com. Coinmarketcap.com. And I would never use a search engine to search for a particular project. We were talking about tokens earlier, and you can a token project could be as simple as someone throwing up a website encouraging people to buy, pumping, and then dumping, call it a rug pull, here today, gone tomorrow. That happened a lot in 2018, 2019 with the initial coin offering or ICO boom and bust, and that's always going to be of concern. So I would never search online. I would go to CoinMarketCap and find one of the 19,000 different types of coins and tokens, and all of the historical data is sitting there as well. So it's not accurate to describe the space of being completely without metrics when we have an entire database that has all of those metrics from crypto, from non-fungible tokens, also decentralized finance. And that is a great way. It also has a really great learning tool that's free as well. I onboard a lot of my Advantage Evans students with CoinMarketCap as well, so that they begin to check it every day just for the information, not to track the prices per se, but to know enough about things that they're interested in, and also go through the learning process there to get familiar with terminology and the cyclical or non-cyclical nature in some cases of different types of cryptos.
And then okay, so I'm going to go to, maybe I look at Cash App or a reputable place that is allowing me to actually invest in Bitcoin. And I say invest, not buy. And if I wanted to, you mentioned something really interesting that I love on the traditional investment side, and that's dollar cost averaging. You said Satoshi cost averaging. Can you do that with Bitcoin specifically? And that just means that I'm going to commit that I'm going to put, however much, $100 or something a month. Can I maximize my getting involved in Bitcoin that way?
Absolutely. There are a number of both, and I'm going to explain what I'm about to say even further. With wallets, you can have different types of wallets. One that is an app that's based, app-based, or online in some respect. We call that a warm or a hot wallet. And then you have cold storage, Trezor, Ledger. My students use Ledger, but they also have Trezors and some others. And that's a way of managing offline. So there's an additional layer of protection. And then again, we have exchanges. In almost all of those areas, and certainly with exchanges, you can create daily, weekly, monthly, quarterly, biannually, annual buys at a certain set it and forget it amount. And that's going to be critically important to do a little bit over time. Again, not timing the market. What day is something going to go up or down? Unless you're a trader, you're a day trader, swing trader. That's not my ministry. I'm invested in long-term investment where my assets are working harder than me, and I have something at the end of this wonderful life to pass on to my relatives so they can continue the process. That's long-term. That's a long-term strategy. I don't have a short-term strategy, although there are some really great people operating in that space. The challenge in that respect is that the crypto market is a 24/7, 365 global market. There is no holiday. It doesn't go down. It's the blessing and the challenge in the space. And the final point is about the Satoshi. The Satoshi is the smallest unit of Bitcoin in the same way that a penny is to $1. It's not a 1-for-1, so it's not 100 to 1, but Satoshi little s instead of the Satoshi, it's obviously it's an homage to the creator. And so this idea of Satoshi cost averaging over time is a really great strategy for a hard capped asset like Bitcoin, but also can be good for amassing other types of coins and tokens as well.
I so love the way you give the backstory on this so that people can connect the dot. And then finally, analyze, optimize, maximize. If you were someone and you're taking in all of this information, if I actually wanted to maximize on getting exposed in this marketplace, what is the most impactful advice you could give to our viewers just around understanding how this fits in their overall financial picture?
The best thing that ever happened to me was actually entering very reluctantly. Remember, I'm an attorney, so I'm trained in the art of critique and pointing out all of the things that can go wrong and then writing a 30-page memo about it, warning you of all the pitfalls. So this is my mindset even to this day, but I also would be remiss if I was not training the next wave of lawyers to be conversant in this language, and certainly empowering this next generation and the generations to come to really move the needle on generational wealth. So that's kind of the context. Learning as much as you can, as early as you can. Please, I have everything that ranges from free webinars to white glove one-on-one onboarding, depending upon where you fall in. I have a club at a low cost. I have on-demand courses as well that you get in for 90 days. You come in and join us in the club as well. I have cohorts throughout the year. I'll probably have one this summer. You can find all of that information at advantageevans.com. But what we have to do now is just to recognize that we have to prepare for the future today, that the seeds that we plant as a matter of value, but also of education about finances and about value and about the energy of money and money as a tool, not something that we chase from a mindset of lack, but here is an opportunity. We've talked about reparations. We've talked about the presence or absence of generational wealth opportunities. We've talked about distrust with traditional finance. And now we have this new thing where all of the intermediaries, be it government, be it racism, be it traditional finance, some things that are just hardwired into the American experience. And there's the opportunity to learn about another tool that gives an advantage where most people who have amassed wealth in this country and around the world are not participating in crypto. And yet here we are talking about it. And here they are actually offering it to their high net worth individuals, but not across the board to all of their customers. Why? Ask that question and figure out what are the trusted sources of information in this space. Be very cautious. If it sounds too good to be true, It probably is that we don't throw that out just because we're in the crypto space. But I use myself as my own personal example. The way that I amassed many of my positions in the space was actually not buying it, but earning it. I served as the chair of the Maker Foundation, which was providing oversight to the Maker DAO. DAO stands for Decentralized Autonomous Organization. It's a major player in the DeFi space. What I had to learn and at the same time unlearn about the current system helped me to see the opportunity in DeFi. As a lawyer, I want a proper regulatory and legal framework that calibrates between protecting consumers and investors, but also supporting the type of innovation that actually does what this great nation actually promises, that there's enough and is good, that there's equity, equality, and opportunity for all. Ironically, we have not had that experience to date. There is an opportunity to do so in the future of money, but it's only if we prepare for it today. So focus on education. What I tell my students, learn while you earn, because it's a little bit over time. And every time you learn something new, there's a new opportunity, and knowledge is power, particularly knowledge about your finances.
I totally agree. And I'm so excited that you came on to really educate us, Professor Evans, about what it means to lean in, even though you're not comfortable. I cannot say it enough that, knowledge is power, but even more importantly, knowledge correctly applied is power. And so I'm so glad you joined us on Get Wealthy today. Thank you so much for coming on.
Thank you.
All right, don't go anywhere, folks, because when I come back, I want to share with you the 3 takeaways from today's show that you can put into action.
Put 10 in here?
10, and you don't come out till you die. And you eat him, you hoop 10.
Oh my God.
So what?
Welcome back. Well, it's the end of the show, but I hope you learned a lot from today's episode about cryptocurrency and what you need to know to get involved. And so these are our 3 takeaways from today. You should be a bit more educated. Number 1, cryptocurrency is a digital asset secured by blockchain or computer code. It is a new asset class, but it's similar to a stock or a bond, and it represents an economic value. And then finally, it is early stage, and we talked about that. And so higher risk, higher volatility. But the way you mitigate risk, the way you de-risk is through knowledge. And so that's going to do it for me on this episode of Get Wealthy. Thanks so much for joining us. I'm Deborah Owens, America's Wealth Coach. Thanks for joining us today.